What if you woke up tomorrow and your bank account was frozen? No warning, no letter, no phone call, just gone. And the worst part? It would be completely legal. I know that sounds dramatic. But stick with me for the next few minutes, because what I am about to share with you is not a conspiracy theory. This is real. This is happening. And if you are not paying attention to the banking changes rolling out in 2026, you could be caught completely off guard. Welcome back to Smart Money and Retirement. I am glad you are here today because this is one of those videos that I genuinely believe every single person with a bank account needs to watch. Let me start with something that happened to a man in Ohio. Retired, 67 years old. Spent 40 years saving. One morning, he tries to pay a medical bill online and his account is locked. He calls the bank. They tell him his account has been flagged under new compliance protocols. He is not a criminal. He has never missed a payment in his life. But because of a series of transactions that a new automated system flagged as unusual, his money was inaccessible for 11 days. 11 days. For a retired man who needed that money to live. Now here is why I am telling you this story right now in 2026. Because the rules that allowed that to happen have not gotten looser. They have gotten tighter. Starting this year, financial institutions across the United States are operating under a significantly upgraded framework tied to the Bank Secrecy Act enforcement and updated FinCEN guidelines. These are not small tweaks. We are talking about a major expansion in what banks are required to monitor, report, and act on. And the automation behind it has been overhauled. Artificial intelligence systems are now doing what human compliance officers used to do. Which sounds efficient until you realize that an algorithm does not know your life story. So what specifically changed? There are 3 things you need to understand. First, the transaction monitoring thresholds have shifted. For years, most people knew about the $10,000 cash reporting rule. You deposit or withdraw more than $10,000 in cash, and the bank files a currency transaction report with the federal government. Fine. Most people know that. What most people do not know is that the newer systems are also designed to catch what regulators call structuring. That is when someone makes multiple smaller deposits that appear designed to avoid the $10,000 trigger. $3,000 here, $4,000 there. Even if you have a completely innocent reason for doing that, maybe you are just moving money around from different sources, the system can flag it. And once flagged, the bank is legally required to file a suspicious activity report. Here is the chilling part. They are not allowed to tell you they did it. You will never know. Second, the digital reporting expansion. The 2026 updates have brought more digital payment platforms and fintech services under the same reporting umbrella that traditional banks have operated under for years. So if you are using payment apps, digital wallets, or online transfer services thinking they are somehow more private or less monitored, I need you to update that thinking right now. Regulators closed those gaps deliberately this year. The reporting requirements have been extended, and the sharing of information between these platforms and traditional financial institutions has expanded significantly. Third, and this one is particularly relevant for my smart money and retirement community, the rules around dormant accounts and inactivity have been tightened. Accounts that show prolonged inactivity, even accounts with significant balances, are being reviewed more aggressively. Some states have also updated their escapement laws, which is the process by which unclaimed property, including bank accounts, gets turned over to the state. If you have money sitting in old accounts you have not touched in a while, please do not assume it is safe just because you know it is there. The bank may not agree with your definition of active. Now, here's the part of the video where I want to slow down and talk to you directly. I am not here to make you panic. I am not here to tell you to stuff cash in your mattress or move everything into gold. That is not practical advice, and it is not what smart money and retirement is about. What I want to do is give you a clear, simple action plan to protect yourself under these new rules. Number 1. Review your account activity right now. Log in to every bank account, every payment app, every financial account you own. Look for anything that might look unusual from the outside. A pattern of similar-sized deposits, irregular large transfers, anything that could trigger an automated flag. You are not doing this because you did something wrong. You are doing this because you want to see what an algorithm might see. Number 2. Document everything. This sounds basic, but it is so important. Keep records of where your money comes from. A note on your phone. A simple spreadsheet. If you are depositing proceeds from selling something, a vehicle, some equipment, keep the receipt. If you are moving money between your own accounts, have a clear record of that transfer. If you are ever questioned, documentation is everything. Number 3. Diversify your financial footprint carefully. Having all your money in one institution is not just a risk from a financial stability standpoint. It is also a vulnerability when it comes to account freezes. If one account is locked, having access to funds at a second institution can be the difference between a stressful situation and a devastating one. Number 4. If you are retired or approaching retirement, check your beneficiary designations and account titling. Under the new frameworks, accounts going through estate processes have faced additional scrutiny. Making sure your accounts are properly titled and your beneficiaries are current can save your family an enormous amount of grief. Number 5. Know who to call. Seriously, find out right now what your bank's compliance department number is. Not the general customer service line, the actual compliance or fraud resolution department. If your account is ever frozen, the regular customer service rep cannot help you. You need to go directly to the people who can actually review your case. Look, the banking system is not the enemy here, but it is a system. And systems run on rules and algorithms. They do not know you personally. They do not know that the $5,000 you deposited last Tuesday was from selling your old car. They just see a pattern and react to it. Your job, and the reason we do this on Smart Money and Retirement, is to make sure you are never caught unprepared. Knowledge is protection, and the people who understand these rules are the ones who never have to worry about them. If you found this video helpful, please hit that like button right now because it helps this information reach more people who genuinely need it. And if you know someone who is approaching retirement or already retired, share this with them today. This is exactly the kind of thing people wish someone had told them sooner. Subscribe to Smart Money and Retirement if you are not already part of this community. We cover the things that actually matter for your financial life. Not the fluff. Not the hype. Just real, actionable information that helps you protect what you have worked so hard to build. I will see you in the next one. Stay sharp. Stay protected.